whatever it is. But like, I just buy up a couple things. I've made like I think my portfolio is up like 23% in like a month. And so everybody like loves that shit. It's all DJ, and they're like,
That's just off
oh,
of
I'm following your
stocks.
trades.
That's just off of stocks, no options.
That's just, yeah, it's just straight up just buying
Oh my
stocks. I'm not trying to do
god.
options because you get hit with so much decay
Yeah,
when
that's a
like a
huge
day goes by.
problem.
You get one red day, you get hit with the decay. It's over. Like your options are gonna be worth like so much because only a week. And some of the stocks that you buy, I'm buying like don't even have options because they're penny stocks. So
Okay, I just started it up. So I'm day zero gaming slash day zero. I recently moved off of gaming, so uh, I'm day zero, and then this is Fridge Financial as well from After Hour, as well as YouTube, right? You have your own channel.
yeah, YouTube, Instagram, after hours, you name it, I'm basically there.
That's
TikTok, I
perfect,
heard just
man.
got put up like 5 minutes ago, believe it or not, which is crazy.
TikTok's back, yeah. That's pretty
Yeah, I was
nuts.
like, dude, no way. Quick little
But
ban.
if you wanted to, here in a second, like if you want to kind of introduce like what you do on your profiles and kind of what your content stream is.
Yeah, absolutely. So, I mean, so what my channel is kind of like a little bit of degenning with like not option trading, with like stock trading, with my ChatGPT challenge I'm doing right now. And then a lot of the time, though, it's more of educational content, ways to build your retirement accounts, even the small things that some people aren't aware of with financial sector. Because I'm a teacher by day, so I love to educate people on just anything that I really can. So I do a
What
lot of things with
subject
like
is it?
education. Huh?
What subject is do you teach?
Oh, I teach math, so that's why I
Math.
like drive
That's
my alley,
awesome.
basically.
Okay, that's perfect.
Yeah,
That's
yeah. Everyone
legitimately
always
just
says
perfect.
they're like, oh, like, do you do like finance? I'm like, honestly, if I want to go back to college, I would go back for like my finance degree because like they'll like talk to me and they're just like, dude, do you not do finance? I'm like, no, I just read a lot, like in my free time for it.
That's pretty insane, honestly. Yeah, just in general. Um,
Mhm.
so I made a post just now on After Hours, so we'll see some people start to trickle in here, as well as on Discord.
Yeah, I let all my in case anyone wants to hear. Because, like I said, most of my things, like almost all the things that I've made over the last couple of years, have never had my webcam on. So like none of my followers know what I even look like. So a
Oh
little bit of a
wow.
surprise.
Well, there we go.
I've tried to do like AI like generation stuff like that, and it's actually like the one on TikTok. There's one that does like a very very good job of it. It looks pretty similar to me. Like a lot of my like shorts and stuff like that. Like it looks very similar. It's kind of interesting actually.
Yeah, that's interesting, man. Um, I pretty much just do just general broad market stuff, usually with options, just because that's where my knowledge is, obviously. But
Mhm.
I did stock trade pretty much since 2018. I've been doing stock trading, which I made a decent amount of money doing that, and then I switched to options just because it's more lucrative. That's the if you're right and you don't get that decay that you're talking about, there's a
Mhm.
lot of money to be made. But you get, like you said, you get stuck with that decay. That 100% gain is now a 99% loss. So with like, and literally, like all it has to do is like 20-cent stock movement. Like it doesn't even have to be ridiculous, depending on
Mhm.
what kind of contract you got going.
Yeah, I've kind
Um,
of branched off a little bit from like doing like those like buying contracts. Usually my main portfolio, my retirement ones are usually selling options now for like passive income essentially. So like I have
yeah,
100
that's
shares
perfect.
of SPY, so I'm selling covered calls against it right now. Just trying to get that premium and then put it into the market somewhere else. Just because it just makes my life easier. And it's like worst case scenario, it's like, oh no, I gotta sell my shares at like a huge profit. Like that's not the end of the world for me, honestly. The only problem is the tax implications, obviously, for the following year. But rather than that, like if I can collect, $100 a week just doing nothing,
hundred
could build
dollars
up
a
even
week.
more.
Wow. Yeah.
Yeah,
Especially,
the premiums are crazy on SPY, obviously, because it's very popular. Obviously, it's one of the most popular ETFs that you trade on. So it's like $100.
plus if
Like
you're
I
holding
think
it,
in the market.
isn't it if you're holding it, you still get the don't they have a dividend on SPY?
Yeah. So I'm getting a dividend
So you get the
2 weeks out. It's
dividend
like
plus
like 40 bucks.
the what's it called? When you're writing the contracts, you get the premium from the contracts. That's what I was thinking of. I thought I had some kind of crazy term I could use there, but like it's essentially just the word premium. Is the simple way to put
Yeah.
that.
Yeah,
Um,
so like I was looking at like thankfully like because I didn't have a position right now until last Thursday and last Friday when the markets or last Wednesday, Thursday, Friday when the markets had a nice rally. So then since stock price pushed up, I was like, let me sell a cover call against it in case there might be a pullback, whatever the case is. So the thing is though is that we'll see what happens obviously with the inauguration tomorrow. Who knows what the market's going to do with presidential inauguration speech.
I think the market's closed tomorrow because isn't it Martin Luther King Jr. Day or something? I might be wrong there, but it's definitely a holiday
No,
tomorrow.
yeah, yeah, so it's closed, and then the day I'm just curious to know like what the day after is gonna
Tuesday.
look like,
Yeah.
like the euphoria or whatever. It's gonna be interesting to see.
I think what's crazy is there's all sorts of coins coming out right now too, like stuff I wouldn't typically buy, you know what I mean? Like official Trump
Mm.
coin, official Melania coin, official Barron coin, official Elon coin. It's like okay. And a lot of people have made some money off of it, but like once it dumps, that's gonna suck. But
Yeah, no, I know that I was looking at it this morning.
speaking of euphoria, obviously, I had to bring that up.
I think this morning. Oh yeah, so official Trump is down. Oh my God, it's come down a lot since it was this morning. I was looking at it. It was at 70, and now it's down at 40. So you lost like at least almost half your gains right there. If you bought in at 70, you bought the top.
Oh wow, yeah. And anyone that bought like anywhere between that, like they still probably lost money because you bought while it was going up like 50, 60, 70. Like right now
Mm.
you're at a loss. So then you're bag holding, then it goes down to 30 and you sell, and it goes back up to like 50 the next day.
Right. Yeah. Cryptos are always like a tough thing to like really kind of work with. I'm only in, Bitcoin and Ethereum. That's really all about I'm really at. Could I've gotten into like XRP, like yeah, it's a lot of potential there for that market, but now it's up like over $3, I think I saw it recently.
Yeah, it was over $3. I don't know what it's at as of this moment or when people are watching, but yeah, it did go to
Mm.
I think $3.16 or so. But that kind of ties into the topic today, which is like the economy, right? Like it's kind of this euphoric economy right now because like you look at the charts, like everything's just had like this complete like scale up, right? Like everything's just
Mm.
since the election pretty much it's just like the entire market's rallied.
Yeah, it's crazy. I think we all kind of expected that. I'm annoyed because like I was holding Tesla for the longest time at like 20 or like 208, 212, something like
Oh,
that. And I was like, dude, like this thing's not moving. And I was just like, I'm gonna just cut my losses. I'll tax loss harvest it, whatever. Market after the election just pumps. Tesla goes over to like three something. I was like, dude, that could have been it's a regretful thing with the euphoria for it, kind of. But I mean, in hindsight, you don't really know what's going to happen. Tesla could have gone to like 150, and I could have lost even more
yeah,
money. So
exactly. Like I had some call options around Tesla's earnings, which was like right before that huge pump, right?
yeah.
The earnings is kind of what the catalyst was for the pump, really. It just hasn't stopped pumping since then. But I had bought some call options, like not zero DTE. It was like 1 week to expiration, and then like
Mm.
I woke up the next day and the options had like 5x, and I was like, okay, I'm selling this shit. Like I didn't expect it to keep going, and then uh, from there, like those options like 20x or something like that, like by expiration, but. There's no way to tell that stuff, and it's just like just take the money while you can, um,
Mm.
tax
Yeah,
loss
it's kind of like
harvest
what
when
I
you
do
can.
with like the Chat GPT thing I'm doing, where it's just like I think it was not last week, but the week before. Like I was like, oh, these are stocks they recommend. I was like, all right. So I put $100 in market open. I'm in the middle of teaching my class, like whatever. And I go to check it out my lunch break, and like three stocks pumped up like 30%. And I was like, dude, it hasn't even been like a day in this for the week. So I was like, I'm taking these profits. Like, there's nothing wrong with that, you know. Like, took 30% on each one of those, and I wrote it out, and it was a like, crazy good week for that kind of positions. But it's all about taking the profits in those kind of risky things, you know.
Definitely, man. Uh, so tell me a little bit more about like your Chat GPT challenges and stuff, because that's kind of interesting.
Yeah, so I mean, believe it or not, it was like I think it was like Christmas Day, believe it or not. I was just like, dude, I'm sitting there at like Christmas dinner with my family. I'm just like I'm sitting there thinking, I'm just like, what can I do? Like I'm on break from school for until like January, and I was like, I gotta think of something to do. Like, what can I do to be like, like a more fun thing? Because like obviously there's options trading, but then when you lose 3, 4 grand on it, you just get like so sad and upset and whatever. And
16
then I
racks.
remember and I remember I was watching I was reading this article and they were just like there was a monkey like years ago that like picked stocks and like they all like just killed it. And I was just like, dude, like I don't have access to a monkey, obviously. Like I can't just go out and get one of those. So I was like, what's the thing that can pick stocks for me to see what actually happens? And I was like, well, AI is a huge thing. So I was like, you know what? Let me start playing around with that a little bit. So I've been like typing in like ChatGPT, like, you're a day trader, you're looking at doing this, you're looking at doing that, and like the prompting is like just it's just so frustrating at times. Like this morning I was doing it and it was just like the same stocks over and over again. And I was like, stop saying these stocks, like give me something else. And it just kept putting it out. But so I put a prompt in and then it gives me a big old list of stocks. And then I do some research. I do a little bit of charting and formatting things, kind of looking at what the stock is showing for me. And then I dwindle it down to like 5 stocks I want to go in with, put $100 into each one, like mark it open Monday morning, and then see what the hell happens.
Man, that's nuts. And you said it's pretty much been a perfect record for that so far?
Yeah, the challenge is 4 for 4. Like, and obviously
Wow.
it's the infant stage, so am I gonna be back here a year from now being like I'm 52 for 52? Probably not, because that'd be absolutely insanity. But I'm 4 for 4 right now. I'm up like 20 something percent in that portfolio. It's only like $500, but I'm up like over $100 right now. So
It's awesome. Yeah.
something fun to do.
An extra $100. That's what everyone wants in the world is an extra $100.
Right. Yeah.
It
So
saved
I
you
mean,
like
originally the idea was to be like just like, oh, let me just have it pick the stocks and whatever. Then I was like, no, let me actually like tie in like my knowledge, my understanding of charting, and kind of like put them together. Where it's like you gave me all the lists. Now I'm gonna go inside and look at the charts, see what the stock's doing, the momentums possibly, and then make my decision. So that way, at the end of the day, it's still me making the call
right.
as to what to invest in, but they just kind of give me the list of what to do.
You saw that ChatGPT recently got like a charting feature, like it can chart everything out for you.
I actually have not seen that yet. I was looking at how much it costs for like the premium versions
I
because they
just
give you
use
like a
the
trial
free
like
one.
every day.
Yeah. Yeah, that's what I do.
Yeah, it's like $20 a month for like the upgraded version, and then there's a $200 a month one. And I was like, that's great. Like, I don't know what that one is,
Would
and I
you
would
pay
love
two
to know
hundred
what it is.
dollars if it meant that you could make more than $200 on the stock market a month? Like that is a good concept.
Right? Yeah. So I was sitting there, I was just like, dude, like, there's no way. Like, so apparently it was a thing. But I was like, no, I'll do the free premium ones and use up my like 4 free trials wisely a day and hope for the best kind of thing.
Yeah, that's kind of what I've been doing as well, just with ChatGPT in general. Um, Kind of switching topics a little bit. You did say that you're kind of more into like economic data when you're looking at potential investment opportunities. Did you want to kind of jump into that a little bit?
Yeah, dude, absolutely. So, I mean, like last week, I was talking to like some of my viewers and talking to some other colleagues I like talked to on Discord and stuff, and we had like all those different economic datas coming out with the PPI data, the CPI data, all that fun stuff. And I was reading into it like the night before, and I was like looking at it, and I was like, I think everybody's expecting inflation to uptick. Like there was no like everyone's like, oh, I'm gonna be waiting for it to come back down. Like no, like everybody was like full on board, like it's gonna go up. The question was how much it was gonna go up by. And I think the fact of the matter is that since it didn't go up by what people were hoping it would, and it came in less, that's what kind of pushed the market up to a rally for like better rate cut projections, having more rate cuts this year, because that's kind of what I think is driving right now is that hopeful euphoria of rate cut, rate cut, rate cut, bring them down back to inflation. We're cutting down those rates for borrowing, and I think that's kind of what the major focus is now. I think the huge problem though right now with that is you have a new president elect in office and you have no idea like what's going to happen in the next like couple of years with like he has his tariffs that he was looking at putting into place, the repercussions to that. I think the market is kind of just like in shock almost, and it just like has no idea what's going to happen in the next like couple of years, and that's kind of, I feel like there's a lot of fear in that aspect, which is why the minute you see like that one gleaming hope of inflation's a little bit better than before, or it's not as much, it's not as high as we hoped for, the market, it was like a pressure release valve, and it just pushed the market up because they were just like so happy to see that. But I think it's really, really tough to really tell what's going to happen. I know the markets are looking at 3 rate cuts this year, which is interesting, but the first one's not projected till like May or June. So it's going to be interesting to see what happens in the next like couple months, I feel.
I think in the next couple months, we're gonna have a lot going on because in place of those rate cuts is going to be potentially the government cuts, right? Which is going to be the whole Doge thing. And on top of that, there's all the threats with tariffs, etc. So, I mean, that could somewhat take precedent over rate cuts anyways. So,
Oh yeah, 100%. But it was just interesting because I was looking at like the Fed Watch tool that projects like probabilities of interest rates and stuff like that and cuts, and just watching just inflation data coming in better than expected for CPI and PPI, like the probabilities went up like 5-10% just in a matter of a day because it was again like this like release valve of crazy where it was like, oh my god, we're gonna have more rate cut potentials and stuff like that. But if you look at through like the economic projections, they're only looking at potentially 3 rate cuts the whole year anyways. So if we're already pricing in 3, all that really takes is imagine one crazy bad news thing happens, one thing flips in the government and the economy, and then who knows what's going to happen. Those tariffs can cause a huge inflation increase across for the consumers. We just can't know, and that's where I think the market is just like, what do we do? And they're kind of like at a standstill almost. I feel like right now.
yeah, that's kind of the sentiment I get as well. It seemed like everyone was somewhat, like, including the market makers, were somewhat bearish going into the new year. You saw a lot of the, like, when we had that, my bad, I don't have the term off the top of my head, but like it was the yearly contracts, the monthly contracts, and the weekly contracts were all expiring at the same time recently, and all the money
Oh,
got
OPEC,
moved pretty
OPEC.
much. Yeah, OPEX, yeah.
Yeah,
It moved, all the money moved mostly towards like March puts, and it was just like way lower, like than people expected, like way, way, way lower on the puts, um, which was bearish, even though the opening of puts is somewhat bullish, right? Like long-term
right.
bullish. Um, but since then, you've kind of seen that money move around. Like now it's into April, into even like November next year. So a lot of that money's like just uncertain right now. So they've
Mhm.
picked up all that money that they had in March. Because what's going on in March is like there's a lot of stuff going on like in the world, like Middle East, as well as in China around that time. So people were thinking like there's going to be a stimulus for Chinese companies and stuff in March, and then there was also some potential agreements in uh, the East with the United States and like with the West on trade. So like basically a lot less American bullishness and just more international stuff going on. So that's kind of why the money was placed kind of in March. But it seems like that was based on like China tariffs and like on a trade war. Uh, because obviously, if we're at a trade war with China and then they do a stimulus in their own country and then they have partnerships with Russia and with the rest of the West, I mean, that would be more internationally bullish than American bullish because we wouldn't have as much business
Mhm.
going on, right? So, It made
Yeah.
sense at the time, but now I think the sentiment's changing, um, just to be more open, pretty much, because no one knows what's going on right now.
Yeah. I mean, so one of the people I was talking to in Discord, I think it was over this last weekend, he brought up a really interesting point that the Bank of Japan is looking at raising rates um for like the second time in the last like I don't know how many years it's been now because Japan's always had like zero interest rates, if not even you look back, it was like negative for the
Right.
longest time. And someone brought up a really good point. He asked me, he goes, what does that mean for the US economy? And like what how could a interest rate hike in another country really impact the US? And because a lot of people don't really think of that at first as like what it actually could do for the US standpoint. And it brings up the idea of the carry trade, which I don't know how much you know about the idea of the carry trade.
I'm somewhat knowledgeable.
Yeah, so it's basically like more of like you usually borrow money from a country with a lower currency, with a lower yield in the currency. So like Japan's rates are like 0.25%. So it's kind of like a forex currency conversion you're basically using against the market. And so like right now Japan is like 0.25%. So you could have your money in a low yield, you could borrow money from the low yield of 0.25%, then you can park it into US dollar treasury bonds, whatever the possibility is, at 3.5%, 4%, and you basically are making the difference because it's guaranteed to be backed by the US government with the treasuries and everything else. So you basically make like 3.5 to almost 4% on just the spread of it. And so I think what's happening now, and people are getting a little bit worried about, is if the rates come down for the U.S. and the rates go up for the Japan, it it like closes the gap as to that carry trade. There's a lot of people that apparently are doing it, and now it's starting to be like people are going to start pulling their money out and doing something else with it. Like, what does that mean? So it might have some sort of implication. I believe it was something like this happened similar in like March or April of last year, where the market had a little bit of panic because like it's the carry trade unwinding, I guess. And so people are starting to get concerned about that now as to like what's going to happen with the Bank of Japan because they never really raise rates, it seems like ever. So it's really interesting.
Speaking of that part of the world, like everything going on in South Korea right now as well is just kind of market destabilizing. Yeah, that's a good word. Sorry, I was trying to not sound stupid there, but
That's all good.
definitely like all these like partners, like especially like we have U.S. military there, obviously. Like North Korea is their northern border, so anything unstable in that country is kind of a concern. So especially for the market. So
Mhm.
definitely that part of the
Yeah, I
world's
think
important as well.
Yeah, that's kind of just where it's at. Where we're just kind of just looking like, I mean, when we had the first, Middle East conflict, or we had the first conflict between Ukraine and Russia, like now it's been like 2 years ago now, it's something like that. Market was down like 3% pre-market because it was just like one huge, like just big hit on the market, like just made everybody panic, freak out. And the minute that happens is when markets like just dump it because they just don't know what to expect. So I feel like now with that, like it's going to be interesting to see, like even the next couple of weeks, like how the market is going to react to now seeing officially the inauguration of President Trump. Now, like what are they going to think? Are they be like, oh my god, is it still going to be wow euphoria, or is it going to be like, oh crap, like what's going to happen? Like the TikTok thing is crazy. Like they banned it, like they took it down last night and they brought it back like today. Like it was that quick. What could that mean for other implications, economic related or whatever? Like,
Because
who
usually the
knows?
government moves slow. Like anytime you think of government, you think of slow, long, lengthy
Mhm.
process. And TikTok was banned one day and literally unbanned the next day. That was crazy.
which is like okay, cool, but then it's just like okay, so what else can like flip on a switch now? Because I think a lot of people, I made a YouTube video about this like before even the election. And I was like, because everyone was talking about, oh, they want Trump in office, everything else like that, and I'm not someone who really is that much into the political aspect of things, but more just understanding what their political pathway could mean for the U.S. economy. And it's just like if he's imposing these tariffs, like those tariffs, those prices are coming back to us. Like it's going to hike up those prices because they got to make their money somehow. And it's like people just need to I think people don't quite see like that inflation, that those price increases on imports is going to come back to us. They're not going to be like, oh, we'll take the loss. That's not what's going to happen. They're going to push it onto us, it seems like, possibly. And people are freaking out about, like, oh, we have such high inflation, such high inflation. It's like, this could be a re-tick up in inflation depending on how well they do it and how they roll it out. If they roll out like
Execution, yeah.
10% and then another 10%, like, okay, cool. But if he comes in, it's just like, I think it was like 40% tariff on China, like, that could just blow the whole roof off, and who knows what's going to happen after that.
Not only that, but also with Mexico and Canada as well. He's been pretty vocal about, hey, it's not cool that all this automobile stuff's going on in Mexico. He doesn't like the cartels.
Mhm.
He could flip a zero trade policy if he wanted to on automobiles overnight. Hey,
Yep.
these are not going to cross our border. He could do that with, he could stall all trade with Mexico until the cartel issue is resolved. I mean, he could do whatever. I mean, he is limited somewhat by like other branches so that of government. So there's that. But like just like conceptually, like pretty much everything's on the table right now.
Yeah, I mean, yeah, I honestly can't even project. I can't even predict to think about what the market's going to do this year. And I think
Mhm.
that's kind of where we're at right now. Just everyone's looking at it overall, just being so like what I'm doing like with my investments is like I'm keeping money parked aside. I'm still putting money into the market, but I think this is the kind of time where it's uncertainty. Like you can still put money in the market, but not just like full port and put it all in there. It's going to be euphoria because since it's so uncertain, I feel like it's going to be like it's basically like a coin flip. I feel like where it's like heads the market pumps, tails the market crashes. Like who knows? And we have been on a nice bullish run for the last like what now 2 years. I mean, maybe it's due for a correction. I mean, who
That's what
knows?
that's what I was saying back in December, but like seeing the money move around just like changed my perspective. I'm not sure what to think right now. The way the money was set up, it looked like there was going to be a humongous correction. Like I'm talking about like 10, 15%, but like the way the money's moved, it doesn't look like that anymore. So that's good that that doesn't look like that, but at least you could kind of tell a direction beforehand. Now it's impossible.
Yeah, people are just like, oh, like, do I buy at all time highs? Do I wait until a correction? And I was talking to some people about it earlier today, and it was, you look at the idea of dollar cost averaging, lump sum investing. What's better? What should I do? Should I park money now? Should I put it all in there now? Should I just wait till it comes back? And I feel like this is the point where they usually talk about like so data suggests that lump sum investing, full port in the money when you get it, is usually beneficial for everybody. You get better returns. The market does better than it does worse over the last 100 plus years, obviously. So usually it's better just to throw all your money in there. I'm looking at it right now as in like since this uncertainty is here, dollar cost averaging may not be a bad idea just to limit your risk potentially you have because it's it's just a toss up. Like I don't know. I can't even sit there and be like, oh, we're gonna do great. I know we have next week. We have the what's coming up in economic data. Personal consumption expenditures coming up end of the month. That'll be interesting to see. Um, we should hopefully have, I think, at some point coming up soon. At some point, I don't know if it's this month or next month, but the economic projections, which is really interesting always to read through and see what the Fed is thinking about what's going to happen with like interest rates and rate cuts and everything else like that. So there's a lot of data between, like you were saying earlier, there's a lot of data that's going to come out between now and like June's rate cut that's being projected right now. All that data that they're going to have could either make rate cuts be less likely or make it be more likely, and that also could help steer the economy in a certain direction. So, should be interesting
Definitely.
to see what they come up with.
And a lot of the institutions have also just came out with like what they are predicting for the market. So, and a lot of them are just very similar, which is nice, but they're bullish on different sectors of the economy, which is interesting. Um,
Mhm.
like, like obviously there's so many different institutions that you just have to go through each individual one. Like BlackRock has a report up, Bank of America has a report up. Like you can go through any institution and see what their predictions are and what they are most bullish on for the next year, which is pretty helpful for
Mhm.
an individual investor because you can just look at, hey, BlackRock thinks this is going to do well. Okay, cool.
Yeah.
So that's pretty interesting.
Yeah, if most of the like institutions are looking at having like a bullish year, then you could probably be like, all right, so the hope is that the markets are going to be going up, even if it's like 3%, 4%, still a gain in your investment account, still a gain in your retirement account. Like, not what you're looking for. But if most of the institutions are looking at being bullish, great. That might give you a little bit of that kind of direction as to where the markets are thinking. But it always leads back. It's always interesting. Like, I've seen some articles and some people posted, just like, they'll be like, JP Morgan was projecting to be like 10% down or whatever it was. And this year was up 25%. It's like just totally missed the mark on the whole thing, which is kind of just like, nobody really knows
Right.
what's going to happen in the markets at all.
Like this year it outperformed every institution's predictions, but they also don't want to put super high uh things that won't get achieved either. So there's that as well. Like they don't want to just lie to themselves.
Yeah, they also probably were looking at it and being like, well, it's an election year, but they probably weren't expecting all that money to be flooded into the market as soon as the election was over. Like it was just like up like 2%, another 1%, another, like it just like pumped as soon as the election ended. Wednesday, Thursday, Friday, next week it was still pumping. Like there was a lot of money that came in from people buying it and everything else because after the election, and they probably I would assume they would factor that part in, but probably not factoring in that much of a huge increase in the markets, is what my
No,
guess
it
would
was
be.
crazy. Like pretty much every US company went up like 10, 15, 20%.
Yeah. When I see futures up 2%, like I'm like, that's wild. Like futures are never up 2%. They're up like point 10, they're up like maybe point 2. If economic data comes out, then it's like point 4, point 5, but it was like 2+% was the futures market at one point, which is absolutely unheard of in the markets.
Yeah, that's the same thing like with the crypto market as well, right? Like you saw Bitcoin just pump up to like 107,000, 108,000. I don't remember what its peak
Yeah.
was, but uh
Yeah.
pretty much every anything you can put money into was pumping. Like anywhere you
Yeah.
could put an asset, it was appreciating in value.
Yep. Yeah, absolutely. And that's why I was like, I sold out my crypto. I took my profits on Bitcoin like earlier last year. And I mean, obviously looking back on it, like, yeah, I could have probably, made another like 10-15% of my investment. Cause I think I sold my Bitcoin and stuff when it was like 70 something thousand. So obviously, yeah, I could have, but I don't think anybody was going to think that Bitcoin was going to pump to over 100K that quickly in a matter of like a
Hmm.
month and a half or whatever it was.
Yeah, especially companies like MicroStrategy, right? Like MicroStrategy just like I mean, obviously it's diluted a lot since then. Like that's part of their plan. I'm not going to get into, but like imagine being able to get into MicroStrategy before that pump and then just seeing like your $50 stock go up to like well over $400. They made a lot of
Mhm.
millionaires on After Hour, and like not to critique after the fact. Like I do understand, like in the moment, it's like, oh yeah, it's gonna keep going up, right? But there's a lot of people that became millionaires overnight, and then they doubled down like on call options, and then obviously Bitcoin kept going up, but MicroStrategy kept on diluting and diluting down to like
Mhm.
$370 a stock, I think. Which I mean, you have $1 million at one point, sure, but then like we're saying, the depreciation of that theta, the time value in those shares, like you see these millionaires, like some of them have like 300, $400,000 in their accounts now,
Mhm.
just from their calls expiring, as well as just not having a good covered call strategy on their shares or
Right.
a good
And it's
hedge, I
interesting that
guess.
you bring that. It's interesting to bring that up because, sorry, it's interesting to bring that up because you think about this idea of, like, for example, like GameStop, like, whatever it was, 4 years ago with the GameStop AMC saga and stuff like that. And it's the company itself is like, dude, our shares are worth like $300. Like, they're gonna liquidate, they're gonna sell their shares off, take those profits and then put back in the company. Like you're gonna start to get like that like pressure release of people selling their stocks off and taking profits for it. Because if I'm any kind of company owner, CEO, whatever, and I see my portfolio like 5x, 10x, like
I
I'd
don't
be like,
even need to
guys,
run the
let's take
company
that money
anymore.
out and then build it. Like you can't just ride the wave forever. You gotta take the profits at some point, I would think, So it's the same thing with MicroStrategy. Probably they're probably they're probably selling off maybe whatever it could have been.
Yeah, they were
And
doing
I
that
don't
and they
know.
were buying more Bitcoin with it. That's exactly what
Yeah,
they were
I,
doing.
I think that's like the interesting thing is that like you're basically just like buying into like a Bitcoin vault. Basically, is what you're buying into because that's the sole foundation of MicroStrategy is Bitcoin. And if people don't think that, it's like no, like that's literally like most of not all their value is literally in the valuation of Bitcoin. So if
They
you
have
do
an
get a bear
interesting
market
strategy.
cycle,
They have an
what's up?
interesting strategy long term to loan out Bitcoin for like percent yields and to also just keep releasing at the money dilution of shares.
Mhm.
It's pretty insane. So they keep diluting shares at the money or slightly above the money while also putting out 0% yield bonds for future shares. Um, it's pretty insane. So they're loaning out future shares of their company at 0%, guarantee your money back if the share price isn't there whenever the bond expires, which is like 27, 28, right?
Right.
That's pretty insane. It's, to be like, for me to hand my money to a company and be like, I believe in you so much, I believe your shares are going to be worth more. So I want 0% interest on this money for the next 3 years. But if I'm wrong, I get all my money back.
Yeah, I don't really. If, from your side, you don't really see much of like a downside. It's like worst case scenario, you get your money back and that's it, kind of thing. But
That's better than holding the
just
shares right now.
yeah, I think with like MicroStrategy, I haven't really been someone to really like get into that stage of like investing into like that kind of company where it's like just mostly crypto based and everything like that. Now I have exposure to I back in exposure with Bitcoin, but I do it more in the ETF more
Yeah,
or
that's
less with
smart.
it.
I'm waiting for an
So I do
XRP ETF. Once
yeah.
that comes out, I'm gonna buy into that a little bit.
Oh yeah, absolutely. I know that like I'm in BITO. It's like ETF. What they do is they pay out dividend monthly, but it's based off of like their options contracts and the profits they make, so that they kind of like sell it back out to holders. So when crypto pumps, it does go up as well, but not as much as what Bitcoin would go by itself. But you do get a little bit of a nice like monthly dividend, which allows me to like hopefully like reduce my dollar cost average down even more to then be able to go more into it. My hope is to get over 100 shares, start selling covered calls against it, cash secured puts if I need to. Um, so I'm still having that Bitcoin exposure, but at least while Bitcoin either is like stagnant or even if it declines, I'm still making some money on the dividend monthly payment, which is like right now it's like $30 a month I'm getting right now just for holding it. So I can't really argue that right now, honestly, as Bitcoin does whatever.
Yeah, you don't even have to watch like the problem with it, like investing in the asset itself, is you pretty much stay glued to the charts. With a passive investment like that, you can just kind of just let it sit. Obviously, if Bitcoin went down to like 50 grand, you'd probably be down a little bit, but
Right?
but I
Yeah,
mean, as far as like the $1,000 deviations that would normally have people like on edge, you're not really stressing as much.
yeah, and I think it's definitely that idea of making sure that you're like you have the exposure, but not overly exposed to that kind of market. So like if my portfolio is like 3% in like Bitcoin ETF, like fine. I still have the exposure in case it rises up, but if it crashes down, it's only 3% of my portfolio. Most of it's in SPY, SCHD, those paying out ETFs, dividends, appreciation values. Like that's where I'd rather have it compared to like a very speculative investment like Bitcoin. And I don't sit there and say, I don't believe in it because obviously if I didn't believe in it, I wouldn't have money into it, obviously. But it's
Right.
not like I'm a believer like Michael Saylor enough to like full pour my whole like amount of money into it. Just be like, yeah, I got this.
Yeah, it's definitely a rabbit hole that people go down, right? So there's that. Like there's the Bitcoin maxis, which is like the orange pill people, and then there's the MicroStrategy maxis, which is like the red pill. So it's like
Yeah.
there's different tiers to this stuff, which is pretty
Yeah.
nuts.
Have you ever seen the Dogecoin millionaire guy? Have you ever seen read about him at all?
No, I haven't. Are you talking about
So
like
this guy, this was like 4 or 5. This is when Elon was gonna go on Saturday Night Live. Do you remember? I don't know if you know about that story when Elon was gonna go on Saturday Night Live and everyone was like super hyped about it. Um, so he started talking about Dogecoin being used for a payment for like a Tesla,
yeah, I
and
remember that.
people were getting so hyped around it, whatever. This guy from I think California, like took all of his money out, maxed out his credit cards, took like everything basically, like $218,000 worth of stuff, maxed out credit cards, loans, whatever. Full ports the whole thing into Dogecoin at like 8 cents, whatever it was.
Oh wow.
Dogecoin pumped like 70, and he's just like sitting on like $2.5 million. And then Elon Musk Saturday Night Live comes out and it crashed the price. And he went from like 2.5 down to like 400K. It was crazy.
You need to know when to sell. That's the problem. Like I do see that a lot. I've run into that a lot. Like I'm not gonna lie. Like there's times where my options contracts are up like 300%, and I'm like, I want more money. So and then the theta will eat, and then it'll end up expiring worthless. The
Yeah.
contract. I'll lose the initial amount that I originally put in, and sometimes it's like $2,000, $3,000. Uh, the worst example was $16,000. I rode that up to 100,000,
Oh
and
my God.
then wrote it down to zero. So, like, you definitely need to learn when to sell. And that's goes for millionaires too. Like, people aren't used to that kind of money. Like, they'll have $100,000 in the market, and they'll get lucky somehow. Like, they'll be invested in Palantir or Nvidia somehow, and it'll pump to over $1 million. And you need to know when to sell, pretty much, because or just hold. I mean, like if it's shares, that's fine. You know what I mean? Like
Yeah.
long term, like Nvidia or Palantir, I'm bullish enough on to where it's not going to zero out, right? But
Mhm.
like with MicroStrategy or with even with Coca-Cola, like if you have options contracts on like anything with dividends and then you're not familiar with like when the dividends are going to pull out, your options contract will go to zero overnight. So
Right.
just paying attention to stuff like that is really important.
Yeah, I know that. So, like, I've talked to like my students before about this because, like, they asked me, so I'm like a math teacher, like, oh, like, what do you know about finance? I'm like, dude, I know way too much, probably to be a math teacher. Like, I'm in the wrong like job for this. I feel like sometimes, and they're just like, oh, Mister, like, you're like, I bet you wish you bought in that Bitcoin. I bet you wish you got in Bitcoin. Wish you did it. And I'm like, yeah, okay, sure. And I was like, here's the thing that people struggle to understand though. If I bought in at Bitcoin at like $100 a share, like
You just sold
years
it
and
at
years
a
ago,
thousand.
I would have sold it at 1,000. There's very, very few people who have probably held it from $100 up to $100,000. There's probably very few people that would have done that. I would have sold it at 1,000, be like, I'm a flipping genius. I just 10x my money. Like, dude, somebody put me on like Wall Street floor. Like, look at this. Like, I just 10x my money in like a year, whatever. Even 10,000, you 100x your money. Like, if you're not taking those profits, then what would you be doing, right? I feel like the people that still have Bitcoin, maybe from $100, are people that A, forgot their login on their
Forgot it.
key and they can't access it, or B, they just are the very few percent of people that hold it. And I'm just like, and people always ask like, wouldn't you wish you got in? Yeah, I would have, but I wouldn't have held it to this far. I would have sold it at 10K, 5K, whatever. If I bought it at 20, I would have sold it at 30. If I bought it at 50, I would have sold it at like a 70. It's very hard to diamond hand Bitcoin the entire way up without having stress when you see your portfolio down 15, 20% in like a month with how volatile it is.
Well, the thing with Bitcoin is like, I'm not going to say it's original use case, but like the original reason it was mostly used for was like this, like payments on the Silk Road because it's decentralized, a lot of criminal activity, right? So a lot of the people that held it since like those days were people that a lot of people that were locked up in prison and come back, and then they still have their Bitcoin, as well
Yeah.
as people that just bought marijuana with it and then left some extra, like, because Bitcoins were pretty cheap back then. They'd leave like 50 Bitcoins in there, 20 Bitcoins, and just leave it in there,
Mhm.
and then uh, they'd find some other guy in person that would supply them. So they just, I
Yeah.
mean, the Bitcoins were pretty much worthless, so they'd just leave them in there. So,
There
like,
was a
that's exactly
there
what
was an
happened.
article that came out about this judge who told this guy to stop looking for his Bitcoin because he had like 30 Bitcoin in a storage drive, I think, or something like that, and he threw it out. And the judge is like, "Yeah, stop looking, dude. Like it's over." And he actually got an order to stop searching for his Bitcoin. And I was like, "That's so funny." Like he must have had like a whole team looking for this thing. It's crazy.
And then there's the guy that lost it in the landfill or whatever, and it was like some ridiculous amount of Bitcoin.
Mhm. And then there's the guy who bought like two pizzas with like 50 Bitcoin, like 2011 or whatever it was. And everyone was like, I hope that was the best pizza of your life." And I was like, honestly, it probably was, because
That's what a friend of
why
mine
not?
was
I
telling
mean,
me, like a coworker. He told me he, like, in the course of the time he spent like using Bitcoin, he probably smoked over 500 Bitcoin worth of marijuana, which was, not that much money back then, but like looking back at it now, it's like, wow, those were some expensive joints there, bud. Like, looking back at it now, it's like kind of comedic. Like people were using them for these like nefarious reasons, like put a hit out on somebody and you pay 100,000 Bitcoin. It's like, wow, you just killed that guy for $1 billion, man.
there was a documentary on Netflix that came out recently about this couple who scammed and like was able to hack in to oh my god, I can't think about what Coinbase platform or what crypto platform it was. And they hacked into it. They took like a couple 100 million worth of Bitcoin, whatever. And they did the whole they interviewed like the FBI who was tracking and everything else like that. And he was like, dude, like we were following the money like everywhere. Like they kept trying to take it, put it here, then withdraw it. Take the money, move it here, withdraw. And like they just kept following it. Like and they were able to follow the entire path to be able to figure out who actually hacked it and took all this Bitcoin. Like it was absolutely crazy what it was. But it's yeah, I mean that's kind of like the thing where it's just like we're like kind of what you're thinking like with XRP, XRP I think is like one of the futures because that's the one that focuses on digital payments, right? Without like transaction fees and everything like that. Like that's a huge thing because people are sending money like all over the place and you gotta pay fees, you gotta wait days for it, you gotta wait
It's
for it
like
to
with
go through.
Solano, like with this Trump coin and everything, like it's just kind of a lot of leakage there. Like you're losing a lot of money just trading the coins
Mm,
compared to XRP. Like you could probably just trade XRP for US dollars, really, like pretty
right.
easily,
Yeah,
equal
so that's why
weight.
it's like XRP might be it's definitely going to be one of those main contenders for the future of payments because I have if I've talked to people over the years where it's like I want to send money to somebody out of the country, it takes me like 3-4 days for it to get through, but it's just like I can just take XRP, use that, send it off, it goes right through, you get it right away, you're able to use it, transact with it, whatever. Like that's the crazy thing, and that's kind of what you're talking about with like the original idea of Bitcoin was to do it as like digitalized payments, stuff like that and without having it be centralized by the government and everything else. So it's really interesting.
Also, there's a huge differential in like buy and sell power on Bitcoin. Like the spread is just ridiculous.
Yeah, people trade like point like oh 03 Bitcoin or something like that, and it's like a $500 difference or whatever. I'll sit up there and like at night and I'll like watch the chart just because it's fun to watch to see what's going on with it if it's pumping, dumping, whatever. And like you just see like those bid ass spreads. It's just like, dude, like that's a crazy amount of spread. Like it's not like it's not you never see one Bitcoin. It's like 0.003, 0.005. Like you see those very small increments, but it's still a couple $100 for a bid ask spread. Like it's crazy.
Yeah, it's ridiculous. Like if you tried to trade a whole coin, it would probably be I'd guarantee you at least $1,000 difference, but maybe even more than that.
For the bid ask. Yeah, well, most likely.
Yeah, like it could be like $108,000 buy price, but like sell price would be like 106 or something.
Yeah. And also, like, if you do it
Plus
on
the
like
fees,
Coinbase or anything else, you gotta pay the gas fees that go with it. Also, like those gas fees are gonna add up like really quick. Also,
especially
so
for a full Bitcoin, yeah.
oh yeah, that's like the one thing that like crypto has that like obviously like, a lot of stocks don't is like you have like the transaction fees, the contract fees for options where it's
It's
like
like eight
3 cents,
cents.
whatever.
Yeah.
Yeah, and it's like Bitcoin is like yeah, $100 just to send it. Okay, I'm good. I'm gonna keep my Bitcoin actually. Like that's the crazy part is that the gas fees are crazy for some of these coins.
And it didn't used to be like that. Like it used to be like these Bitcoins, like you could trade them for like we're saying like pennies, and it's just like that's how these companies are making money at the end of the day.
Mhm. And then you see like you see like on my Instagram for whatever reason that it's like the filtering is crazy sometimes with it. I don't know what it is. But it'll be like if you put $100 into this token here, you would have made like 500K, 300K, and then like every time the problem is those like people like they see these and think, oh, I'm gonna get rich quick, pump these coins, whatever. Either it's a pump and dump and it's already too late, or B, even if it does pump up, the liquidity is impossible because there's not many people there that are gonna be looking at buying it. Like you have to be able to actually like sell off your position, and if you can't do it, there's no the money's worth nothing because you can't actually withdraw it and take it out and keep it.
Yeah, that stuff's insane, man. So moving on a little bit, is there anything else you would like to talk about, like as far as the stock market?
I'm trying to think here really as to what it is that I mean, I know that like recently I've been looking more at like quantum computing as like future like next 10, 15, 20 years. So like my retirement account I've started putting money into like Quantum's ETF. So that way I have the exposure to quantum computing but not like
Not a single
individual assets.
company. Okay, that's actually really intelligent because who knows
Yeah.
which companies are actually going to be around in like 10, 20 years with in general, let alone quantum, right? So yeah, an ETF makes sense there
Yeah,
because they'll
so I
always
think
just
this
switch the weight
ETF
around the weighting.
Yes, I think this ETF has it has like the bigger like quantum computing companies like I think Ionic is one of them. Whatever. I
Quantico,
think Palantir is also
IonQ,
one of it, though,
Rigetti.
like that. Yeah, I mean, the positioning it for it is like that's kind of why I was like, oh, like why not get exposed to it a little bit? So yeah, Ionic, Rigetti Computing, Taiwan Semiconductors is in there, Applied Materials, like so at least you get the exposure to quantum computing aspect, but not like the full on like full port your money into it, which has been really nice. And like for the last year, it's up like 50%. So it's outperforming the S&P 500 by a mile. And it's still like everybody's always saying
In
like this
its
is the early
infancy.
stages of quantum computing. Like you're not even getting the full potential of what it will actually be, along with AI and everything else. So I've been kind of putting some money towards that ETF, the semiconductor ETF as well. Um, Kind of really pushing those growth companies for the next, hopefully 5, 10, 15 years to kind of really grow my portfolio up a little bit.
Yeah, that's interesting. There's definitely a use case for ETFs, especially ones that offer those dividends that you just like put right back into the ETF over time. That's a good
Mm,
reward for like longer term loyalty in the ETFs. So I do
yeah.
appreciate that.
Because I'm someone who like I'll look at like people be looking at like oh like why don't you just put money into like Nvidia, Tesla, whatever. I still am a believer in Tesla long term. They have so much. There's so much there, behind not just the electric vehicle, but all the data they've processed from the driving over the years. You have all these different technology parts. It's like basically a huge data center in itself is just the company, and there's so many things you could do with it.
Are the brain
But
chips, is
for
that
me,
part of Tesla or is that like its own separate company that Elon
which
owns?
one?
The one with the brain chips.
I think it's his own company that
Oh,
Elon.
okay.
I want to say it's his own company, kind of like SpaceX is a kind of like its own little thing that he's got going on. But I look at it as in like, yeah, like I could, and I've already full
Neuralink.
poured my portfolio into Tesla. Like, and that was, and then I took the downside of that one. And I'm just like, with ETFs, like you still have the exposure to Tesla, you still have the exposure to Nvidia, you still have the exposure to Google, Microsoft, Apple, whatever. But without the risk of being like, if Tesla goes to zero, that would be crazy also in itself. Like the market's
That would
probably going
be
crazy
insane.
already,
Yeah,
but I mean, at least it's not like the entire account's gonna go to zero because I have exposure to other companies as well. So that's why, like, when people always ask me, they'll sit there and be like, "I want to get started with investing. I want to look into stocks, stuff like that." And then he's like, "What do I do? What should I buy into?" And I tell people all the time, first of all, I don't do financial advice at all. I have no certifications for that, like whatsoever.
nothing.
But off the record, ETFs is just your starting, like your stepping stone. If you want to do more research and get into it more, then sure, you can grow it up and look for those next 10x companies. Great, by all means too. But if you're looking at starting off basic, it's ETFs is your way to go, in my opinion.
Definitely, especially like with newer investors. The dividends alone will be more comfortable for them, like seeing that, like not even like re-enrolling them into back into the stock, just have it like go back into their account as cash. Like that's a really good way to like get started investing is getting that money back while also keeping the asset.
Mm.
A lot of like newer people, I recommend stuff like Coca-Cola and like really just like easy ones that you can do that are kind of just like stagnant and it just builds cash really fast. But yeah, ETFs or like dividend stocks like are really good.
Yeah, definitely. I know that
Coca-Cola as a
like
company is pretty much just an ETF anyways, because it's like all these different brands and all just added together, right? I mean, at a certain point, like one company is just like so large that it kind of just encompasses enough to be its own ETF. But
yeah, definitely. I think definitely seeing like you see that first dividend paycheck. Like I used to, my portfolio when I first started investing was in like dividends and everything else. And like I was getting like months of like $100 something in dividends, $200 in dividends, whatever it was. And now I'm just kind of just like I took a step back and I was just like, the way you look at it also is that like the dividend approach is more of like when you're getting closer to retirement, you want that stable income, you want to have that like cash to be able to pull out really quick if you need it for retirement. And it's just like you underperform the market usually because your dividends, if it's like a 3% dividend, you're probably looking at the stock maybe gaining 5%, whatever, plus 3% dividend, still underperforming by like the market by like, a couple percent. So I kind of took a step aside from that and started putting into like growth companies, growth ETFs mostly
yeah,
to kind of really try to push it.
yeah, that's definitely great as well. Um,
It's the investing game, but I was reading I was reading all like this article and it was just like like less than half the people are invested even in the stock market. It's just like even just getting started with like 10, 20, $100, you're already in a better spot than somebody who has all their money parked right in cash in a savings account with like 0.5% APR or whatever it is.
as
I
long as
think
you're
what it
making a
is,
gain, you're good.
yeah,
It's
exactly.
when
I
people
think what
start
it is,
treating it like a casino, that's when they start having problems.
right? Yeah, I think what it is that people think of like the stock market like a casino. They look at it as in like they're gambling, like, oh, if I put $100 into here, I could lose my $100. I don't want to lose $100. I would rather keep it in cash and make sure I don't lose it. And it's like, yes, if you full port it into penny stocks, then sure, yeah, you have a chance of losing it. But if you do top quality companies, Nvidia, Microsoft, Tesla, S&P 500, whatever you want to put the money into, like chances are you're more likely to make money in the long term, and that's what the goal is. So I think the focus, I think, like I wish is that people would start to stop being less afraid of even just starting to invest it because I was afraid too. I put $100 and was like, oh crap, if I lose $100, I'm out $100. Now my portfolio is over like 60 grand, and it's just like I look at it like it's nothing. I'm like, yep, whatever. I look on, log in, see what goes on, log off 5 minutes later, like it's no big deal because it's a matter of just getting used to it as time goes on. But I think a lot of people are still afraid in that initial stage of putting money that they might lose, but chances are it's also not going to go to zero in a day. Maybe a couple of weeks or a couple of months if you put it in penny stocks, sure, but
Yeah, and that's the point is like you want to put it in like quality companies. Like even just putting it into like Mag 7 and Berkshire Hathaway, like you'd be fine. Or
oh
like
yeah,
even like a
absolutely.
Mag 7 tracking ETF or
Mhm.
something. You'd probably overperform the market actually,
Right.
funny
You
enough.
can put. I know I saw somebody that there's somebody has like 5% exposure to a 2x leveraged S&P 500 ETF, which is interesting. I didn't think that was even a thing until he was like, yeah, like I have like most of my money's in like S&P 500, but when we have like a big correction, I put my money into the 2x ETF and it comes back up. And
There was
he's
someone
like,
that
I outperformed the
explained a
market.
really good strategy to me. He said that the stock market daily has fluctuations. You're not looking for like on the day for it to go down 1%. You're looking at it from its from like its peak in the day to its low in the day. The stock market, the S&P 500 to drop anywhere from 0.25% to 0.50%. And in the 2x leverage ETF, that's a movement of 0.5% to 1%. And he said it usually fluctuates 2 to 3 times a day. So you can make 2 to 3% a day just trading leveraged S&P 500 shares. Um, and then he explained it to me like he's done that every day for the last like year, and he's made like over 200 something percent returns.
Yeah.
And that because there's only a certain amount of trading days in the year. Like obviously you can't trade weekends and holidays and stuff. So
Mhm.
it made sense, and I was just like, wow, that is a ridiculous way to make money. But um, yeah, there are fluctuations, and then if you're wrong and it doesn't fluctuate back, you just wait for the S&P 500 to go back up like what 0.25%. That's going to happen the next day, right? So that's
Right.
pretty interesting.
I think the only speculation with the leverage ETFs and leverage stocks in general that I think I even myself I forget about sometimes is that like if S&P goes down 0.25, then the leverage goes down 0.5. But that means that the leverage needs to go up like 100% compared to that. You know what I mean? Like it's like when you leverage the downside, it also has to do a huge performance to get back to the upside to even make you break even. So it's kind of like the give and take, like the good and the bad with ETFs and leverages is that like you have to have a bigger return to make sure that like you get back to break even. Like that's the hard part, I think, with those leverage ETFs. But I know a lot of people I've talked to, they do like SQQQ and TQQ because those are like the bullish and bearish triple leverage ETFs for the Nasdaq, which they trade every day and they buy shares because you don't need to buy options. You just buy the shares. There's not as much decay that you're going to hit if you do zero DTE options
Right.
or
Yeah,
even weekly
that's
options. Get the
that's definitely a
shares.
big thing is like just knowledge with like how leverage works on ETFs because the downside is a lot different than the upside on those.
Mhm.
And the stock could return to the same price and the ETF won't be the same it was just due to that. So, yeah,
Yeah.
a lot of people don't understand how that leverage works.
Yeah, when people started talking about it, I was just like, "Oh, okay." So I started doing some research and googling things. And honestly, though, I went on like some Reddit pages because everybody asked the same questions: leverage ETFs, what's the downside? And just reading those forums, there's people that like really break it down. Just like, here's the math. Like, you need to understand. If it goes down 50%, you're down 100%. You have to make 200% to like basically get it back because
Right.
of the underlying essence of that. It's like, oh my god, yeah, you're right. So like even though people talk so much smack about Reddit pages sometimes, I'm like, dude, there's some very quality information here that like you actually is like, yeah, that makes sense. You
The way
know,
the math
so
works is just ridiculous because, like, if a stock goes down 50% and then goes up 50%, that's not break even. And a lot of people
right.
like just like that's just how percentages works. It's not gonna be the
Mhm.
same because I mean I would break it down, but I'm not that great at math. But basically, like 100 divided, yeah, it's not gonna be the same thing. It's never gonna be the same. It might be
Yeah,
close depending on like how leveraged it is, but like the more
yeah. So
leverage you add
if you
on
had
to it,
like if you had like $100 stock down 50%, you're down $50, right? Then it goes up 50%, you're up 50% of the $50. You're at
So you're
20,
at
you're at
75.
75, not
Exactly.
100. So yeah, you'd have to, if you go down 50, you gotta go up 100 to get back to where you basically started at. And then leverage is like even worse. Like you gotta really make those gains back and hope you have a huge return turnaround for it. So it's crazy like that. Like yeah, people think it's like gambling, right? You play $100 on blackjack, you lose $100. Oh, but if you bet $100 again and you make that back, you break even. It's like that's
It's
not
not
how the
the same
market
thing.
works. The market doesn't work that way. So
Yeah, the percentages are always, it's worse than a casino in some cases because like the percentages are always leveraged against you in that sense.
yeah,
Because especially with theta, theta is horrible unless you're the one selling the contracts.
right. That's kind of what I do is I kind of like look at like selling the options, making sure like, if I have, an 80+% chance of my contract being worthless, great, love it. I'll take that every day of the week. Like it puts me in the house. Basically, the way I've explained to people over the years that like you're basically putting yourself, imagine you go to the casino, instead of being the guy playing blackjack, you're the guy who's like the cameras watching them like you are the house and like you're just hoping that like as long as the nobody hits it big like you're making money, you're making profit, whatever, and long term as you keep doing it you still make more money, so even that one big hit isn't going to impact your profitability over a long period of time. So you're basically flipping it to being the house instead of being the actual gambler essentially.
It's a little bit better even because even if that person hits big, you're still selling that call contract, right? So say the stock was worth
Mhm.
$9 and you're selling a $10 covered call, right? You're still making money off of that. You're still making that dollar per share for 100 shares um off of that covered call. I mean, like, yeah, it might skyrocket up to $15, but that was never your money. You sold it for 10
Right.
bucks, right? So that's the best
Yeah.
way to look at it is you're selling for profit no matter what.
Yeah. I mean, obviously, like, yeah, like that's what everybody always says, oh, like, what's the downside of selling options? Is like, well, for selling covered calls, it's like you're just limiting your potential. But if you're still making potential, if I'm still making 10+%, I'm fine with that. Like, I'm still taking those profits, and then you can, enter in at a better price. Then you can do cash secured puts. You can start doing the whole thing and then go back and do it again and do it again. It allows you to enter and exit your trades really nicely, but it's not like you walk away from it like, man, I really hate that I made like 13% today on my stock instead of like I made like 200%. Like you don't walk away like disappointed about it. You really don't, is the way I look at it.
No, not at all. Is there any other concepts you want to bring up real quick? It's starting to run on time here.
Yeah, I mean, dude, I know. I mean, honestly, thank you for having me on here. It's awesome to be able to talk finance because I talk finance and my friends are just like, dude, shut up. What are you talking about? I'm just like,
Definitely.
dude, I have so much knowledge. Like, I have so much things I want to talk about and I want to hear other people's perspective for things. And people are just like, dude, like, I don't know what you're talking about. Like, let's talk about something else. And I was like, all right, whatever. So, honestly, thank you for even doing this, man. It's awesome. I love to be able to hear from other people, not just, me. It's been awesome.
Definitely. I like doing this. Number one, so that after hours can kind of have more face-to-face interaction, right?
Yeah, yeah.
Because there's a lot of times where we're like on Discord talking or like where we're just in app like itself, just like texting, right? On posts, and I like people having more of a voice. From my knowledge, I'm the only one doing this, so to have as many people on here as possible is great. And I don't mind having people on more than once. And uh, sometimes we have group conversations, like there'll be like two or three of us in here. So yeah, that's always great as well. Have
Yeah,
a
no, for sure. I love it,
full-blown
man. It's awesome.
conversation. So that on top of like the CEOs that we've had on here and stuff like that, like it's just a good opportunity really to hear a whole bunch of different perspectives.
Yeah, you never know what you're gonna hear from somebody, You have different strategies, different ideas, and people are just like, "Oh, wow, I haven't
Exactly.
thought of it that way." Can never learn
Exactly.
too much.
Like Bitcoin wasn't even on the agenda and like somehow like both of our minds still ended up going to it. So that's perfect. Like
Right?
that's what I'm looking for is just like that interaction, right? So I appreciate you
Yeah, dude.
coming
I'm
on,
I'm
man.
I'm around like every single week, man. So, if you ever have any more of these, let me know. If I got time, I'll hop into a call, whatever it is you need. I don't
Perfect.
mind.
Yeah. Man, that sounds great to me because there's days I'm like, man, I really want to do a stream and like I don't have anyone on here, so uh just due to scheduling, like we all work, so definitely.
Right. Yeah, man. Let me know whenever it is you need. By all means, hit me up. Let me know what's going on. I can find some time to make time, especially if people have questions about finance stuff like that. I'm someone who hears from the younger people because I'm like teaching students, obviously, who have these like
Definitely.
crazy questions. So it's always like I can always bring this new thing that I hear. I'm gonna be curious to know what happens on Tuesday when I go back to class and all the kids are like, "Did you hear about what happened with TikTok?" Da-da-da. So like it's gonna be crazy, man. So
Did you invest in fart coin and bro, that's crazy. The fact that that
yeah.
stuff even exists is like so like 2020s.
Right. Yeah, it's absolutely wild, man. But yeah, so I always like to, and I think what I've learned also is that like usually kids set the trend. So like they were talking
That
about
is
like
kind of
Red
how it
Note was
is.
like the alternate to TikTok, I guess. It was another Chinese social media app. And so I was looking at it and I was like, oh, interesting. I was like, so I'm like listening closely to hear like what's the next move? Like where are we going? If TikTok was the thing that was kicked out, like where are we going next? Where should I put my platform next? So it's like you hear these things that like the kids are in the most in the know, believe it or not, which is wild to me. So
That would be a really good metric to try to research is like while TikTok was shut down for those 8 hours, where did all that volume go? Like where did that activity go? Like that's really interesting. I would bet
yeah,
it's most likely Instagram, Snapchat, and YouTube, but I mean, who knows? Maybe some people did. Maybe some like other apps did have like 500% usage during that time.
right.
So yeah,
Yeah,
that'd
could
be
be for sure.
interesting. But I appreciate you for hopping on. I'm gonna cut the stream here and then um, talk to you for a second. So thank you guys for watching.